Maker right now is currently generating $25 to $35 million every single month. Out of any application in crypto, it is generating the most.
GM, good morning. Welcome to Milk Road Radio, where we help you navigate the crypto market one Satoshi at a time. It's Wednesday, June 12th. I'm Jay Hamilton, and today we're joined by Kyle Reidhead. We're going to break down the bull case for why we believe Maker is the most undervalued asset in crypto right now. Kai, great to have you back on the show.
Thanks so much. Excited to be here. Excited to talk about Maker.
Excited to hear you talk about it, because this morning you put out a tweet and you said, I quote, "I'll buy as much Maker as you have right now at $2,200. Sell me all you want, then go fuck off." It seems like you're quite bullish on Maker. You want to explain why you put this tweet out?
Yeah, a little bullish on Maker for sure. And the more I learn about it, the more bullish I get. This tweet comes from the famous tweet from Sam Bankman-Fried. Back in 2021, I think it was, Solana was at $3. And he put out this exact, I literally just copy and pasted his tweet, but he put out this same tweet. And basically, he was at a point where he was like, okay, I'm so bullish on Solana. This thing's so obvious to me, but it's so undervalued. And interestingly, when he put out that tweet, Solana was at $3, which was around the same valuation as what Maker is right now, which is 2 or 2.5 billion FTV. That's what Solana was when he put that quote. It's weird for MakerDAO because Maker is worth 2,200, so it sounds a lot more expensive, but actually in terms of valuations, they were the same. But basically, I'm kind of at the same point with Maker. I think, and that's why the title of this episode, or what you just asked, was, is this the most undervalued asset in crypto? And I think it is. I continue to try to find something else. The more I look into what Maker's doing, its fundamentals now, and then the catalyst that it has coming, I can't be more bullish on this thing. And I just don't understand its valuation right now. It's unbelievably undervalued in my opinion, and super bullish. I'm going to buy more right after this call, by the way.
I love it. Okay, so before we jump into the bull case and explain why their FDV is so low in comparison to their incredible revenues and break that all down, let's just take a step back. For those who don't know MakerDAO, or even for those who do know MakerDAO, can you give a simple explanation of what this project does?
Yeah, Maker is one of the first apps ever built on a blockchain. Just to start there, it was built on Ethereum back in like 2017. It was like one of the first like real use cases that came out in the previous bear market of this one. So back in like 2018, 2019, it was actually live and being used. So it is one of the first, and it has probably the most fundamentals. But basically what Maker is, it is a complex protocol, but to keep it simple, it is a bank for the Ethereum economy. Banks serve a very important role in all economies in the sense that they give users access to dollars, right? Or fiat currency in whatever, depending on which economy you're in. And so if you think about a bank, you can go and you can get dollars through mortgages, through credit cards, through line of credits, whatever, let's say in the US or in Canada or in Europe, whatever. The same is true for Maker, although they don't have it in the form of mortgages and things like that. The main difference between Maker and a traditional bank is that a traditional bank gives you dollars without any collateral. They just figure out, who are you? What jobs do you have? How much money do you make? How much assets do you have? And then they sort of look at you, and a human makes a decision on like, should I give you money or should I not? And what rate will I give you at? Whereas what Maker has done is it is built on a blockchain, and it is fully automated, fully transparent, and permissionless. And so anyone in the world can go and basically get a loan and get dollars, and they can do it without having to say who they are, without having to prove their income. Now, the other sort of big difference here is that, well, I guess two things. One, the rules of Maker is set in stone. There's no human to make that decision. And so the way Maker works is you have to put up collateral in order to get a loan. And so you have to put up your ETH or your wrapped Bitcoin or your staked ETH or whatever they decide to take. And you have to over collateralize. So I have to put up, whatever it is, $150 to get $100, and that's very different than the traditional world, which is I don't have to put up anything and they'll just give me money. That is the idea of basically printing money. That is what banks do in the traditional world. And so banks have a lot more risk because they can take out sketchy loans and give dollars to people who don't actually have the money. Maker can't do that. And so the safety of Maker and the way you get a loan in Maker is actually a lot lower risk than something like a traditional bank in the real world. But ultimately, it is just a bank for the Ethereum economy. Whereas you think of like JP Morgan or Bank of America or whatever, is just a bank for the US economy.
Right. So somebody's holding an investment like staked ETH. They don't want to sell that. They want to keep that, but they'd like to get some leverage on that while they can go and use that as collateral to get some DAI. Obviously, there's some downside to over collateralized loans in that
Yeah.
not everybody can access them now.
Let's clarify a few things. So Maker is the protocol. That is the bank. That is where you go and you give your collateral, and then it gives you dollars. It's dollars that it gives you is in the form of DAI. DAI is their stablecoin. Everyone's heard of stablecoin like USDC, USDT. It is that. The difference is that USDC and USDT are backed 1-to-1 by $1 in a bank account in the US somewhere. DAI is different. It's a decentralized stablecoin. It's not backed by a US dollar. It's backed by ETH or Bitcoin or staked ETH, etc. It's still fully backed, the same as USDT and USDC. It's just, but it's backed by decentralized assets versus like a US dollar or treasury or whatever. So that's one key thing. There is some, I guess, like setbacks or cons to having over collateralized loans. Not everyone can get access to them. You have to have money to get money, right? Whereas someone without money can go to a bank in the traditional world and get money. So obviously it puts a bottleneck on the amount of people that can use this. But you mentioned leverage. That is the idea here. All banks are basically leveraging money. And so, but when you think of leverage, you usually think of people like, going 10x on some shit coin and trying to make a ton of money. That is one way you can use Maker. The other way is just like a lot of people that hold assets and have millions of dollars, let's say, or hundreds of thousands of dollars in ETH or in Bitcoin. They don't want to sell it, right? Because they have to pay taxes on that. And they still want exposure to that asset. So instead, you can just go deposit it in Maker. You can get dollars out from that. And then you can go buy a home or buy a car or pay for coffee or whatever you want without creating a taxable event on your assets and without losing exposure to the assets. So it's not just about leverage for speculation. It's actually just a way to utilize your assets and get some dollars in a safe way so you can go use it for other things.
Okay, so why did you put this tweet out today? What caught your eye? What stats did you see? What chart? I know you saw something, man, that made you think, made the light bulb go off and say, signal, signal. What was it?
So there's a lot of reasons here right now. We'll start with the fundamentals because there's like fundamentally, I think Maker is probably one of the most sound applications in crypto. And then there's also a bunch of short-term catalysts, which we'll talk about maybe near the end if we get to that. First is on the fundamental side. And here's the thing, fundamentals don't really matter in crypto so much, which is probably why it's so undervalued. And also undervalued is just an opinion of mine. It doesn't mean it actually is, right? Who's to say what the value is worth? But one thing I would say is Maker right now is currently generating $25 to $35 million every single month. Okay. It is the most out of any application in crypto. It is generating the most. It is generating more than most L2s and most L1s. I think the only the only protocol is making more revenue right now than Maker is Ethereum, maybe Tron, and I think one other, but I'm not sure exactly which chain that is. So the thing is just dominating in terms of the amount of money it's making. By the way, it makes its money by when you put your assets up for collateral, there's an interest you have to pay, just like you would when you get a credit card, et cetera. I think it's sitting around like 8 or 9% right now. So it makes that. Also, if you get liquidated, you don't pay back your loans. It obviously gets that money and then swaps between its tokens. It makes some money from there as well. So it's got a bunch of revenue generating things. It's generating the most in all of crypto, basically. And yet you have so many assets in the space that are, Celestia, for example, which is a data availability layer, is valued at about 20 billion. And yet it makes about $70 a day. Maker is bringing in 35 million a day, and yet it's valued at 2 billion. It's absolutely insane. And so the revenue side is one. There was another really cool chart that came out. So first, Maker is generating 40% of all profits that happen in Ethereum. That's pretty huge. The other thing to understand is Maker is a bank. And let's just talk for a second how banks work. How do banks grow? Well, banks provide capital or dollars to economies. When an economy grows, right? When its GDP grows, when there's a bunch more assets in that economy, or there's more people in that economy, there's more money to put into your bank. There's more people to open up a bank account, right? And so if you think about the way economies work, they go through cyclical. We've talked about business cycles a lot in this show. We go through the business cycle, which is we have expansions in economies and then contractions, expansions and contractions. And so in 2020, 2021 was the first big expansion for Ethereum, and Maker went huge during that time, okay? Then we contracted. And the economy went through a recession, let's call it, Ethereum did over the last few years. We're back in an expansion mode. right? Ethereum has just gone from a $1,000 asset to 3,500. That's a 3.5x, right? In a matter of about a year. So there's 3.5x more capital that can now go into Maker, right? Also, we've doubled, tripled in users when you account for Ethereum plus its L2s, et cetera, over the last year, right? And we're still early stages here. And so I think that as we continue to expand the economy, again, this is of Ethereum, and not only that, not just the Ethereum economy, but remember there are new, let's call it economic states that are being built on top of Ethereum in terms of L2s, Optimism, Arbitrum, Base, et cetera, which are also bringing in more capital and more users. All of these are potential for Maker, right? All of this is more users and more capital for people to put this in Maker and get dollars. And so to me, when we're in this early stage of a expansion in the economy, banks are just, there's no doubt in my mind that a bank is going to do better as a result of that. It's going to generate more revenue and going to accumulate more capital. And then one other thing is, as there's more use cases in that economy, like staked ETH, for example, which is Lido, or Eigenlayer with restaked, all of that creates more collateral to then be put in Maker and take loans out against. One final note on fundamentally why I think this is a big deal. Actually, two things. One, stablecoins are quite obvious at this point that they are the big use case in crypto. And I've talked a lot about Maker being a bank. It's also has its own stablecoin called DAI. And so as stablecoin adoption grows, DAI will likely just grow along with that. And then the second thing is, as you go into bull markets or when economies expand, what do people do? They take out more leverage, always. It's the one thing that is always true with humans, no matter what you do in finance. Whenever there is a speculative time, people are going to do more leverage, which means that as we expand, we're going to have more users, we're going to have more leverage, and there's more and more interest in utility for stablecoins. Maker is the perfect setup for all of those things.
Okay, so we've got somewhat of a sleeping DeFi giant here. It's got incredible revenues. Its fully diluted value is trading at like a 7 times their revenues, which is way lower than any other crypto
project. It's like the same
project.
as Apple and Google.
Like, it makes no sense when other crypto projects are trading at like 100 to 1,000 times.
Yeah,
we've got them dominating ETH. You said 40% of all DeFi in
profits,
ETH goes to profits, go to Maker. So everything's lining up from a fundamental side. But as you said before, fundamentals aren't necessarily what moves price. So what is it that's catching your attention now, maybe from more the pumpamental side? What do you think is going to come in the future that makes you so excited about it right now?
So to understand that, let me just first start on like the problem of Maker, which is, as you said, it's the sleepy old DeFi dinosaur. Those listening right now, if you haven't been around since 2018, 2019, you probably haven't really heard of Maker. Maybe you have, but you just don't care about it. And part of that is because it's not new shiny thing like Celestia is. Part of it is their branding is terrible. Why is the stablecoin called DAI? That is a brutal name. Why is it not USDM, right? United States Dollar Maker, like USDC and USDT. If I come in, just think of UX. If I come in and I want to get $1 and I'm looking on CoinGecko or wherever in the crypto world and I see USDC, I'm like, oh, okay, that's probably $1. If I see DAI, I'm like, I don't know what the hell that thing is. And then it's not even branded along with its company of Maker, which its token that would represent any growth of DAI, et cetera, is called MKR. So like most people, if you haven't been around, you don't know what the heck that is. And then you also have the price of Maker is, I said at the beginning, it's $2,200. Who the heck wants to buy a token? That sounds very expensive. Mm-hmm. Whereas when Sam Bankman-Fried mentioned how he wanted to buy all the SOL at $3, you're like, oh, should I buy something at $3? Or I want to buy a meme coin at like 10 cents, right? Mm-hmm. And so while it doesn't actually matter because it's all about the valuation, retail and most people, it's just the way that they think. And so Maker has a branding problem more than anything, I would say. And so I think there's a few things that are coming. Actually, there's one more thing. It's not just branding. The other thing was last cycle, a bunch of DeFi protocols had, and even this cycle had incentive programs. They just gave people money to use their product. Maker didn't do that. It was one of the only ones that just said, we're not going to play around with this. We're not going to do that. And so what they did is they just waited, and they decided to see what works, what doesn't work. And so they still have never had an incentive program, whereas every other application you see in crypto has. And yet Maker has done this well and is generating this much revenue. And this leads us to the catalysts that are coming up. So there's a few catalysts here. One is what's called the end game. So basically Maker is doing what's probably going to be one of the biggest I guess, transitions for any protocol in all of crypto ever, outside of maybe Ethereum going from proof of work to proof of stake. But basically, they're changing the whole dynamics of their protocol. And they're going to have these what's called sub DAOs, which are going to start to be able to make faster decisions. It's going to be more decentralized, going to be a better product, et cetera, et cetera. What this really means is a few things. One, there's a rebrand coming with this, where Maker token and DAI will be rebranded. We don't know what that is, but this is happening in the next couple of months. I assume they're going to do a good job in this. At least I hope they do. They're going to do basically like what you would hear as a stock split, right? Tesla's done this many times. Every company's done this, where you basically just like dilute the shares and then the price of the stock goes down. They are doing a 24,000 to 1, basically like stock split, let's call it. So Maker, MKR, is going to go down to like under $1. And that's going to be super helpful for retail. And then they're going to finally have incentive mechanisms starting, which is happening this summer. So any day now. There are a bunch of these like sub DAOs. I'm not going to get into all the details of this because it's quite confusing, but basically Maker is a protocol and then apps build on top of it, right? So Spark is one of them, probably the biggest one. They are launching a token. They're already doing a seasons, like a points program right now, and their token is coming. It's likely going to be valued at a few $1 billion. There's about 6 or 7 other sub DAOs that are also doing incentive programs to get people to use Maker, to mint DAI, hold on to that stablecoin, or use that stablecoin throughout DeFi. And that's going to bring a bunch of capital, a bunch of users. And so a few things are going to happen. A bunch of these tokens are going to launch in terms of these sub DAOs, which creates the wealth effect. Likely people are going to take that, put it into Maker and mint more DAI probably. And it just gets eyeballs on the ecosystem. So there's a lot of, I guess, like short-term things that I think are going to be a pretty big game changer outside of just we are in a bull cycle. I think stablecoins are finally reaching their inflection point. And Maker's not the biggest. I think DAI has a market cap of about 6 billion, whereas USDC is like 30 or 40 billion, and Tether is, I don't even know, 100 billion or close to it. So it's definitely behind in that regard, but it is leading in the decentralized stablecoin side of things. So for those who are worried about the third-party centralized risk of things like Tether and Circle, you have Maker over here, which has DAI, which is used all throughout the Ethereum ecosystem, that is about to have all this attention on it, in my opinion. I think as long as this endgame works. And so I think that 6 billion can go to 10 to 20 billion pretty quickly here in the next few months. And if that happens, the value of Maker has to go up, because the more DAI that's in circulation, the more revenue that Maker generates. And what Maker does is they buy back Maker with any of their access profits. So what they do is any revenues they make, that 35 million, they give that out to people holding DAI. So there's an incentive to hold DAI. I think it's 8% right now you can get just by holding it. You don't have to do anything else. You don't get that when you hold USDC or USDT. But then also any extra they have, they basically burn Maker. So they have value accrual back to their token from real revenues. There's basically no other applications in the entire space that does this. So look, it's a complex thing to understand. A lot of retail doesn't really they don't get banks. They don't get financial products. DeFi is not necessarily sexy to a lot of people. Big revenues is. And I think once they rebrand and people start to see, once retail starts to get excited about this because it's a cheaper token and it makes a lot more sense to people, and they kind of fix a lot of these things, and there's incentive programs, all the things like that Blast is doing, et cetera. And Solana just recently launched a bunch of tokens. That brings so much attention. And then people start to go, holy shit, this thing is actually a beast. It is printing money. It has value accrual. It has all the things. And I think that is leading to what's going to be just the perfect setup for Maker. Short term too.
You just teased my next question very well, which is my final question for you today. And that is, okay, so I believe in the Ethereum economy. I believe the Ethereum economy needs a bank. And why wouldn't I invest in the bank that is already super profitable and proven their track record, and also is about to create a bunch of hype with this end game marketing promo that they're doing and the branding, all this stuff? You got me sold, Kai. What do I do?
Wait, I got one more thing.
Oh, you
Before
got
you
another
ask
thing.
me that, I got one more thing that I
geez.
forgot to add. I guess I sort of mentioned it, but I think I need to double tap on it because I think it's really important, which is right now, DAI only exists on Ethereum. It doesn't exist on layer 2s. And where is all the attention and all the users right now? It's moved to layer 2s. They are the biggest thing right now, and at least in the Ethereum ecosystem. Everyone's building apps there. Everyone is moving on there. Payments are going to be on there, not on Ethereum anymore. And yet DAI still only exists there. They are about to, at some point in the next few months as well, launch will be like a bridge, kind of like, what's the Circle CCTP or something like that? It's like a bridge, but much easier, where basically you can mint and move.
Chainlink's CCTP.
Right. Yeah. Circle also has them, but I can't remember the name of it. But anyway, regardless of what this means, is DAI will be put onto all the different L2s, whether that's Base, Optimism, Arbitrum. This is going to happen in the next few months. And I think that opens up a massive window, an opportunity, because it'll just give cheap access to DAI, which no one else has really had, right? A lot of users are kind of priced out on Ethereum, and you can't really do much with your stuff on Ethereum because, again, too expensive. All the apps now have moved to L2s. And I think when they unlock that, along with the rebranding and everything else, the opportunity there is massive.
Wow, you got catalyst after catalyst coming at us here, Kai. This is incredible. Okay, so simple question. I'm sitting here, I'm listening to the show. Shout out to our listeners. Thanks for listening as always. And I either don't own any Maker or any DAI, or maybe I do own some, but I want to increase my allocation. What's your investment thesis here in terms of timing? And is it just buying Maker token, or what are the opportunities to capitalize?
Yeah, so in our pro portfolio, and actually personally as well, our highest share of any token outside of the majors is Maker. And so I think the easiest thing you can do is just hold Maker. I got sort of what I think, and also some other big funds in the space have been sort of estimating, is Maker could go to a $40 billion valuation pretty easily this cycle. It's currently 2.2 or 2.3.
That's a 20x.
It's almost a 20x. It's almost a 20x. In an asset that has been around since 2017, that's actually insane. And so I'm not going to say that's easy to do, but for example, Solana went from around 2 billion FDV when it was $3, when Sam Bankman-Fried said that, to over 100 billion last cycle, or close to 100 billion. So it's happened. And I think Maker could be that. Obviously, a lot of things have to go right for this to occur. It's not like it's a guarantee by any means. But for me, the easiest thing is you can just hold Maker. If you're holding stables, I don't know why you wouldn't hold DAI. You might as well hold DAI because you get 8% just by holding it. You don't have to do anything. It literally sits in your wallet. And so to hold USDC or USDT just makes zero sense in my mind. I also think you have less risk holding DAI than you would with the counterparty risk of having dollars in a bank. Not that I think that's a big deal either. But yeah, you can just do that. Now, there is a bunch of incentive programs coming. So there is the ability to like farm these sub-DAO tokens. I haven't looked into it enough. I don't know exactly the playbook of what to do there. So I'm not saying do any of that. I think the easiest thing though is just hold Maker right now. It's had a nice pullback over the last month or two. And that is just an absolute gift.
This is an absolute gift of an episode, Kyle. That's what's the gift today. The gift that might make us all a 20x. No promises, not investment advice. Do your own research, but you'd certainly lined up a good one for us today, Kai. We want to know, do you hold Maker? Our listeners, answer today's poll question in Spotify or on YouTube. Either yes, you hold Maker, no, you don't hold Maker, or third option, you're running to buy it right now for the first time. Kai, as always, thanks for joining us today.
Thank you, Sarah. Take care.
All right, here's what you missed in news today. First up, the financial magazine Barron wrote an article about which stock could be next added to the S&P 500. And guess what? It's Coin. Coinbase made it on the list. If you are curious to know why we are so bullish on Coin, we recently released an episode on it last week. Go back and check that out. Also in news today, Eigenlayer is got a new competitor on the block, but it's not a new competitor. It's Lido. Lido, which is the staking beast, is launching restaking vaults in partnership with Mellow Finance and Symbiotic. They're aiming to boost staked ETH usage. Now, these vaults let users deposit staked ETH and earn extra yield with more flexibility and customization than other liquid restaking options. And finally, in the news, Uniswap Labs is making a push into on-chain gaming by acquiring Crypto the Game. This strategic move shows Uniswap's commitment to offering innovative and fun experiences for their users. The deal, which includes a mix of cash, tokens, and equity, highlights Uniswap Labs' strong belief in Crypto the Game's potential. Now, with their full support, the Crypto the Game team is expected to make Season 3 a major success, cementing Uniswap Labs as a key player in the exciting world of crypto gaming. Thanks so much for joining us today. Have a wicked awesome day, and we'll see you again tomorrow.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only. Nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.